Look at this chart. It is one of the most important macroeconomic forces affecting Bitcoin's price, and it is currently providing a signal for Bitcoin that we have not received since 2020. For those who are paying attention, this could be signaling a major move that is about to take place on Bitcoin. This metric is something called the copper-to-gold ratio. It's a widely followed indicator in the financial world, used by economists, macro strategists, and institutional investors to measure confidence in the economy. At its core, it's a simple way to measure the state of the global business cycle, and that's because copper, often referred to as Dr. Copper, is known for its ability to evaluate the health of the economy. When copper outperforms gold, this line moves up, signaling that investors are bullish on growth and positioning for expansion. And when gold outperforms copper, this line moves down, reflecting investor caution, risk aversion, and a preference for safety. The reason the copper-to-gold ratio works so well is because copper and gold respond to very different economic conditions. Copper, being used in construction, infrastructure, autos, and manufacturing, is tied to economic expansion. So when the economy is growing, copper demand and its price tends to rise. You can see that through this chart of copper. From 2016 to 2017, and again from mid-2020 through 2021, copper prices surged during periods of strong economic activity. But during slowdowns like the 2018 US-China trade war, 2020 pandemic, and 2022 interest rate hikes, copper sold off sharply. Gold, on the other hand, behaves in the opposite manner. It's a defensive asset that tends to rise when investors are concerned about inflation, war, or financial instability. For example, if we look at the chart of gold during the 2020 pandemic, price briefly dipped, but then quickly surged as investors rushed to safety. Even in February of 2022, when Russia invaded Ukraine, gold saw a sharp rally as geopolitical tensions made investors go risk-off. That's what makes the copper-to-gold ratio so powerful. By comparing these two assets in a single line, it gives us a clear read on the broader macro environment and whether investors are leaning into growth or shifting to safety. According to research from Texas A&M, the copper-to-gold ratio tends to lead major bond yields, like the 10-year Treasury. And that's important because yields shape the broader macro environment and heavily influences where capital flows next. That's exactly why its turning points have aligned almost perfectly with the most explosive phases of Bitcoin's bull markets, and also with its tops. We can see that clearly by looking at the copper-to-gold ratio and adding Bitcoin's price on top. While it's not a perfect one-to-one correlation, the two lines tend to move closely together. When copper outperforms gold, like in 2013, 2017, and 2021, it tends to line up with the steepest parts of Bitcoin's bull market. This move in 2013 lined up with a 10,000% parabolic rally on Bitcoin in just 1 year. This one in 2017 with a 2,500% surge in 14 months. And this one in 2021 with a 600% move and up in only 10 months. On the other hand, when copper begins underperforming, like in 2014, 2018, and 2022, it systematically aligns with bull market tops for Bitcoin. Each time, Bitcoin collapsed by 70 to 90% as it entered a vicious bear market. Since 2023, the copper-to-gold ratio has been trending lower, but Bitcoin has actually been grinding higher during this period. We saw something very similar back in 2019 and 2020, where this ratio was still falling, but Bitcoin still grinded higher. But once the ratio bottomed and started to turn up right here, that's the moment when Bitcoin's momentum accelerated and price went parabolic. So the most aggressive phases of Bitcoin's bull runs have tended to begin right as the copper-to-gold ratio bottoms and starts curling higher. We also saw this here in 2016 and here in 2012, and we think that there's a real possibility for such a scenario to play out in 2025. In fact, the ratio is potentially telling us the precise date where the probability of a Bitcoin top increases substantially. To understand why, let's replace the chart of Bitcoin with the US dollar and zoom out. We can see that there is a clear inverse relationship between the dollar and the copper-to-gold ratio. Moves up in dollar generally coincide with moves down in the ratio, and moves down in the dollar coincide with moves up in the ratio. For instance, between 2002 and 2005, the dollar weakened significantly, and during that same period, copper outperformed gold by nearly 50%. And from 2014 to 2016, the dollar rose, coinciding with copper underperforming gold by 20%, of course. There are short periods where the two can move together, like in 2012. But these stretches usually resolve with the two diverging again. That's because the dollar plays a major role in shaping global risk appetite. When the dollar strengthens, it tends to tighten global financial conditions and slow down growth, so investors move to safety, favoring gold over copper. But when the dollar weakens, liquidity improves, growth expectations rise, and capital starts rotating back into risk assets, causing copper to outperform. Right now, we believe the dollar is more likely to weaken from here, especially as Trump is pushing for lower rates while simultaneously ramping up deficit spending. That combination tends to pressure the dollar lower and is something we've already laid out in more detail in a recent video. If that scenario unfolds, it could be the catalyst that drives this copper to gold ratio higher. And as we've seen, when this ratio begins moving up, it tends to mark the start of the most explosive phase in Bitcoin's bull run. Historically, these upward swings in the ratio have lasted anywhere from 12 to 18 months. But based on our current macro indicators, we believe this upcoming cycle may be shorter in duration, likely lasting no more than 1 year. So if growth slows sharply next year, then this could lead to a significant top forming on Bitcoin sometime around mid-2026, a peak that aligns with the final stretch of economic strength before broader weakness begins to set in. We're taking our clients step by step through this macro environment, outlining our exact crypto strategy through 3 premium videos every week. We send out buy and sell alerts whenever we make any changes to our position. You can see all of our closed trades for 2025 and 2024 on our homepage. If you're interested, click the link down below and join our community.